And today, I'm super excited to be joined by the CEO and co-founder of Enspired, Jürgen Mayerhofer. For those who don't know Enspired, which I'm sure a lot of you do on this, listening onto this podcast, but for those who don't know, Enspired are one of the key players in the flex optimization of batteries and helping customers with all things flexibility. And they offer a fully digital trading solution for this. But Jürgen can tell everyone much better than I can. But Jürgen, welcome to the podcast. Thanks for joining me today.
Thanks for the invite, Patrick.
Yeah, it's great to have you on. Jürgen, if we can just start, for those who don't know Enspired, or for those who want to learn a little bit more about you and the story of Enspired, that'd be great.
Cool. I maybe start also with myself, because our stories are closely related, obviously. I'm actually a trained software engineer. I started in 2002 to optimize natural gas grids, and then moved along being a consultant when the German grid was liberalized, was sitting in Frankfurt, did projects in Romania, Turkey, but always in relation of software and in the beginning rather natural gas and logistics, and later on then rather on the electricity side, implementing ETRM systems. So the projects that you only want to do once in your life, ideally. And I finally ended up in the algorithmic trading space as managing director of Visot. So as quite some of the listeners will know, since end of 2014, beginning of 2015, you could automate trading on Ep10. Ep10 was the first power exchange in Europe to allow to automate order entry and trade execution. Yeah. And we provided software, licensed it to more than 40 of the biggest utilities in Europe. So it was for the energy space, a very fast moving dynamic market, right? Meanwhile, that's a no-brainer to have automated trading. But back then that was like a blue ocean in the textbook, right? Yesterday, humans sitting in front of 12 screens, watching at satellite images, price forecasts, and sitting in front of the comp trader, and a day later, you could automate all that activities, which resulted in Visot being acquired by Toronto Montreal Stock Exchange. And we have been integrated with Trayport, their subsidiary based in London. I guess also a lot of people know their business. And based on that experience, we have been a pure play software vendor. There has been quite some consolidation in that market in the recent years, right? There is not too many independent players left. There are colleagues from Vienna who are doing really good in that space now, but all the others actually have been acquired, I think. With that knowledge of providing software actually tailored to wholesale trading, we experienced some barriers or glass ceilings of that business model, right? Because our customers have been utilities. Because if you want to sell software to somebody, your customer needs the infrastructure to run it. And when I say infrastructure, it's not from a technical perspective, but you need market access. You have to be registered at the power exchanges. You have to access the grid operators, so being balancing responsible or having access to it. You have to have the data. You have to be available 24/7. And this is an infrastructure utilities provide, right? Yeah. But the energy transition is so much more, and not only driven by utilities, right? You may want to work with battery integrators. You want to work with charging infrastructure. You want to work with energy intensive industry, right? We wanted to work with whoever has flexibility in their portfolio or owns or manages the asset. So to increase our impact, the idea of Enspired was to keep software at the center, at the heart of everything, right? So we build everything in-house to be really fast and adapt to market changes, to be fast in scaling into new markets. So we don't have third parties that we have to rely on or to ask for to enter a new market with us. And then we extended the software piece with the full route to market functionality, meaning we are registered trader at Ep10, Nord Pool, other power exchanges in the making. We're balancing responsible parties in 6 countries, meanwhile in Europe. So when you have a flexible asset, you could be an investor, whoever, you can show up and say, hey, I have this battery standing around in Belgium, can you optimize it? And we bring everything, including the infrastructure around it. And that's what we called initially, or what we still call trading as a service, because it's not just the trading component, it's the software, it's the data, it's everything you need to run. So everything you have to provide is the asset, with some key learnings from the past on full transparency towards the customers who were optimizing, like we would be the extended arm of that asset owner, or to don't have any trust issues. So no aggregation behind portfolio magic, mixing things. So it's really that customers get a real-time dashboard. They can watch their battery trading live on their iPhones or wherever they want. So that was the basic idea, to access as many flexible assets as possible and not be bound to one specific segment that has the infrastructure to run software.
So you provide the software and the trading capability on behalf of the asset owners. So do you trade for them, or do you provide the actual signals and the strategies that they do for themselves?
Yeah. So there is actually two ways of doing it. So we're the first, when you say on behalf, so our typical business model is on our own account.
Yeah.
So we will trade with our exchange account and flow the physical electricity from and to your asset, right? So we're kind of a middleman, but we're also the first professional certified trader on EPEX. So we can also leverage the market access of somebody else, providing them technology, but using their market access and trading on their behalf. So it will be on their name. We also do that with Nord Pool already since quite some time. From the service or the scope we deliver, actually nothing changes, right? It's just who's taking care of the cash limits and the market access. But it makes things easier if you scale into the new markets, because we don't have to build the full infrastructure initially, but our customer could provide it if they have it, of course, only.
So you're trying to just make it as easy as possible to provide flexibility to companies that have assets in this space.
Exactly.
Awesome. Thanks for that. And I believe you've got some very exciting news that you'd like to share, Jürgen.
Yeah, that's actually true. How did you know? So we just recently closed our second financing round, our Series B, amounting to 25.5 million euros. We were really lucky because we have been massively oversubscribed. We were lucky with timing, right? Because we're post-energy crisis and we're dealing with flexibility, battery storage, a lot of machine learning, AI involved. So we're kind of a accidentally buzzword compilation in that sense. So we received a lot of interest from investors.
Yeah.
And there is quite a fully packed roadmap that we want to deliver. So we need the proceeds of the rounds on one part for geographical expansion. So we have a first mover strategy, and we totally like to shape markets and to be there and help players get or partners get into those markets. The other component is, of course, software is never done. So we have a lot of features on our roadmaps. So we have delivered first degradation models in real time to be considered for our battery optimization, etc. So it's kind of fully packed already for the next 2 years. And we need more colleagues, right? We're a software company, so we can deliver with more people, but still we are cautious, right? Because our business model is actually being fully automated. So it's not the best sign for us if we get super huge in terms of people.
Well, firstly, I think round of applause. Congratulations. That is huge news. 25.5 million euro. Did you just say?
Yes.
That must be one of the biggest raises, if not the biggest, in this particular market. I can't remember seeing something like that level recently, which is
I hope so.
pretty incredible. And I imagine as the CEO, it's been taking up quite a lot of your time. And you must be quite excited to just release the news and get working.
Yes, I totally enjoy focusing on business again. But indeed, it's really intense, and it sounds a little bit weird now. But if you have too much incoming demand from investors, it's kind of to keep everybody updated, in sync, etc. I know it's a luxury problem, but it's really a lot of work because we really tried to build the cap table for the future. So we really invested a lot of time to find out who can help us, who fits in our governance, whom do we want to have in the board meetings, right? And because if you have the choice, you automatically start to get picky, right?
Well, it's a nice problem to have. When you have inbound capital requests. And obviously, if you look at what's happened the last couple of years, there's not many scale-ups that have had that problem. It's been tough out there. So I think this just shows how much interest, there is in, obviously, Enspired, but also in the space. Like you said, if you can merge automation, AI with battery storage, energy transition, these two are the biggest innovation areas right now. So I think that's great news for you. But I would also say great news for the industry.
Yes, definitely. So I hope I also see some others in our space growing, because competition always pushes innovation, and so we're going in the lead now. So we will invest that money to continuously deliver innovation and put some pressure on our dear colleagues out in the industry. So so I hope they will.
Brilliant. So you touched on it there, but can we just dig a little deeper? Like you said, this money now is going to be invested into one like new market expansion. Did you say? So
yeah.
Could we just dig into that? Like, what do you mean by new market expansion? What should we be looking out for? What's to come in the roadmap?
We have a long list of markets. We have some that we firmly are going to enter, like Spain, for example. We have a lot of opportunistic markets. I mean, we have first customers in Belgium, soon in the Netherlands. So there is some out from a macroeconomic perspective of the battery pipelines, etc. There is some obvious ones. We will also, or we plan currently for our first global market entry in 2025. So our initial idea of the fundraise was to focus on Europe, but there is some really good opportunities that we cannot resist. Let's call it like this.
Okay.
So we're in preparation for that. On the other hand, there is markets struggling that we had fixed in our plan, like the UK, right? If you look at battery storage revenues, actually during fundraising, plummeting to 30% of what they have been 8 months ago. So we're carefully selecting every market and doing a business case and a market entry planning for it, and adjusting priorities not on the fly, but very flexibly, because we look at markets isolated. And as we always use the same technology for those markets, so for us, from an automation point of view, it's important that we don't have a platform for Germany and one for Spain and one for Belgium, etc. Because we want to profit all our customers from new features and new machine learning models, etc., so that we can roll them out quickly. So there is some key markets, and there is others opportunistic. We cannot do everything. Actually, we get opportunities in most European markets, from Portugal to Romania and Nordics. So it's like, setting the right priorities is key now.
Well, as you mentioned, the UK is such a dynamic market, and I guess you have to be agile because the market can change pretty quickly.
So that's part of our strategy, right? Geographical diversification is key. It always has been in our strategy, right? Because you never know. I mean, there is an educated guess on when certain revenue streams will saturate or not. But I can remember the first times we showed up in the UK and talked about battery storage optimization was 2 years ago, and we told the people that ancillary services are going to saturate and wholesales will be more important. And everybody said like, no, that's just because your background is in wholesales, right? Because you're the software guys from the past. And a year later, we showed up there and people were like, there is first players looking into wholesales optimization. And meanwhile, I think it's totally natural, right? And we see that same maturity cycle in most countries, right? Because what the grid needs first is stability, right? So it's standardized regulated products contracted from the TSOs or the grid operators. And these are the first revenue streams in all nascent or emerging markets, right? But as soon as people realized how to make that money and what could get on top, then these markets will not fully saturate in every setup. But and that's what happened to the UK, and it may happen to other countries. So I think diversification is key if you want to be a global player. You cannot focus on 1 or 2 countries.
So as you are looking opportunistically further afield than Europe, which markets are you like getting excited about right now? And could we be watching you enter?
So we're looking at the usual suspects, Australia, US, Japan. I would say from a market structure perspective, Japan is the closest to Europe. It's not yet as crowded as the US. From a macroeconomic perspective, you would have to say US is very attractive. But the thing with the US is we're not saying Europe, right? We talk about Germany and France and Spain, etc., and people say US. And it's not like that every state has the same kind of regulation or deregulation, etc. So calling it the US market is a huge thing. That's we have a tendency towards the east and planning the market entry, but we will for sure take the first global step as part of our diversification.
So Jürgen, it'd be interesting actually to get your views. I was on your LinkedIn company page the other day and saw what I seem to think it must be huge news in the industry in California where am I right in saying for the first time, the majority of the energy that was provided was from batteries, like six gig. So that seemed like big news to me. So it'd be interesting to get your view on that.
So why have the news been so exciting is that I think you could really put it into a picture, right? You were for the first time, people got visualized that batteries do what they're supposed to do, right?
Yeah.
From an optimizer point of view, it's something that happens everywhere in all the markets, right? We do that with our portfolio, but what's so special there is that there is slightly above 6 gigawatts installed in California. And basically the whole or nearly the whole battery fleet has been dispatched in a way to move energy from noon to the late peak, and had a higher contribution than all the other generation units there. This is the perfect picture of how a purely or a grid with a high renewable penetration will run in the future, right? Instead of curtailing PV or excess wind, etc., you need that possibility to store the energy and shift it to a later point in the day. So I think it's really exciting because the magnitude is big. I mean, 6 gigawatts of batteries is huge compared to most other countries on this planet, right? Yeah. And that they were dispatched in favor of the energy transition made it just big news. And the proof that it works for the whole industry.
Yeah, I think that proof was a big thing for me. And California being like, is it I read the 5th largest grid in the world as well. So yes. This isn't a small grid. This is one of the world's largest, and the majority of energy at that time was provided by batteries. So it seems like pretty groundbreaking for the energy transition and look at what's to come.
Yeah, and from an optimizer point of view, what's interesting, so the fundamentals are meanwhile so strong that you know the whole fleet has been dispatched in the same way, right? If you look into other markets, you still have ancillary services, so everything related to capacity with the megawatts, etc., and it requires a split. How you get the best commercial result, but in that sense, energy arbitrage as a use case. So moving the energy is just so strong that the whole country was united, or the batteries of the countries were united, and say, okay, this is the best thing to do to stabilize the grid, which is awesome.
Yeah. Why was it California? Like, is it just because California is really advanced, or do you expect now this to happen in quite a lot of other major grids?
So you will see that in all the grids that have a lot of PV coming in, because wind is of course not as nicely centered around noon. So it has a completely different distribution depending if offshore or onshore. But all the countries with larger and larger PV contribution will see the pattern, and we see it now also in Germany, for example, or continental Europe, with the shoulder months, more PV coming in when we move into summer, and the patterns get stronger and stronger, including negative residual load, so having excess renewable generation more than the demand is, and that's the latest signal for all the players that have not recognized it to build energy storage.
Yeah, absolutely. So given this was the first time, but do you expect this to be a regular occurrence now, like in the summer, like months especially?
It's not even summer yet, right? So the PV peak will increase. PV deployment. I mean, what's interesting about PV is that compared to wind, you need developers for wind, right? Yeah. Private people, households, industrial customers will not build wind park unless they are like super huge on a global scale. But PV adds up, right? From all the residential PV that is deployed, from all the commercial industrial PV that is deployed, from all the grid scale PV. So there is a natural momentum in growth to PV that's maybe not as strong in wind, right? Because it's huge projects, external financing, etc. So you could grow PV just if all the residentials are convinced that to put PV on the rooftop, right? This trend will become stronger and stronger over the years.
Yeah, awesome. So I think it's hopefully a sign of the times to come, where renewable energy is the majority source of power in all the grids, hopefully.
So from a very simple point of view, you have renewable generation like wind and PV, and you have your demand, right?
Yeah.
And if you invert that, what's left is called the residual load, right? And the residual load is what has to be delivered by conventional power plants. You always get market data into the news if the residual load is close to negative or negative, which means you produce more electricity than you would need to satisfy the consumption in a country or area or whatsoever. And then you have the power dynamic or the dynamics of the power market, where you can have negative prices, which is very specific for a commodity, right? So you have to pay for producing electricity or you get curtailed, right? Which is a stupid thing to first build a lot of PV and wind and then say, oh my God, it's too much. I curtail it and shut it down, basically, in simple words. And I think this is so easy and tangible for most people that everybody understands, okay, if I put a battery storage somewhere near co-located or in the same grid area or somewhere, actually, it could take the excess electricity and just move it to a later point in the day, right? To the evening peak, where you typically have a lot of demand when people come home.
So this is where the need for flexibility is absolutely essential.
Yeah, but to be very precise on flexibility, I mean, our business model started, our first asset was a pump storage. Then we had a lot of thermal plants. We have demand side use cases. We also have renewables that are not really flexible yet. We have battery storage and co-located setups with PV, behind the meter, 1 megawatt things. We will start this year with battery swapping stations. So there is different kinds of flexibility, and I would like to sort them. The one is, I would call it the traditional flexibility that is power related. So the megawatts, right? Because a gas turbine can ramp up or down in one specific quarter or one specific half hour, depending on the market granularity. But it cannot move electricity, right? And that's already complex enough, but you don't have to consider the dimension of time other than you have technical restrictions of if after load point switch, you have to remain there for 45 minutes or something like this. And then you have the energy storage, which is different in a sense because you have the power available, but you also have to take the decision when to discharge it again, right? For a thermal plant, you decide if you ramp up or down, or for a demand side, right? Do I consume more or less now? So that's the two main components to have that in mind that need to be treated differently also from an optimization point of view.
Interesting. You mentioned as well, like some of the funding is obviously one to access new markets, and the second one you said you're looking to grow. Like, so people who are watching this who are thinking, wow, like I want to work for Enspired, like what kind of people?
Hopefully.
What kind of people do you want to hire now? Like, what do you think are the growth areas, the skills you want to bring in?
So actually, we're hiring across the board, right? From sales to development and everything in between. We're mainly looking for, I would say, diversity and cultural fit. So we have, I think, still around 20 nationalities, 21-ish in that space. Also from an age perspective, with people sitting in 5 countries, with people that have theoretical physics backgrounds. So it's totally not random, but I would call it diverse, right? Which is part of our strengths. Everything from sales, chief of staff, trading operations, a lot of developers, data scientists. Our website is full.
So you should check out the website.
Yes. And if you want to work at a cool company.
Is this for people who, do you need to move to Vienna? Like where do you need to be? Like, if you want to work for Enspired?
We never had that plan to only have local people. I mean, you have to think we founded Enspired in 2020 and 6 weeks later, COVID showed up, right? And luckily the founding team was working together before for several years. So it was not that big of an issue. But if you have to onboard new people that you have never seen in real life before in the busy beginnings of a company. So we actually never had the idea accidentally. And I think Vienna is a really good place to be. A lot of young people want to relocate, or we have a lot of Polish people, Italian people, Hungarian people. Either they have their spouse in Vienna, or they are young and say, okay, I can move from Bratislava or Budapest to Vienna because I actually can go home over the weekend if I want. All right. So it's a super nice city. It has quite a good location in the middle of Europe, I would say. So I would say we have like still 60% of people in Vienna, which is not only Austrians, and the rest distributed over 5 countries. So there is no need for, I think most of the roles, there's no need to be located in Vienna. We offer relocation services if somebody wants too. We're always happy, of course, if somebody wants to be closer to us. And other than that, we just, what we don't do is fully remote roles, right? Because we think we're still humans, and at some point in time, you have to shake hands or have a coffee or a beer or whatever. So we want people to show up every 2-3 months ish, 2-3 days in the office, to mix and mingle with other teams, get to know each other, to just not lose the connection to the company. But other than that, we take applications from basically everywhere.
If you have an ability to get to Austria, to get to Vienna 2 or 3 days a month, then that's
it doesn't even have to be a month, right? It could be every other month.
So obviously, just to go into that a little bit, because you said you founded the company in COVID. So, and then obviously you were forced to be remote, and the business has obviously been successful since then. What was like the key learnings of how to work like collaboratively from that period of time?
I would say what we learned from the beginning. I mean, we actually rented the office mid of July after the first wave in 2020, and then the second and the third wave, etc., emerged. But what we learned is what I think is very typical for our culture is that we give a lot of trust upfront, because I think a lot of companies struggle. You hear about this back to office policies, blah, blah, blah. Yeah. And I think they're just a lack of trust, right? Because why would I want to have somebody in the office? I mean, I mentioned why we want to see people at some point in time. It's for maintaining the connection and etc. But other than that, we don't care if it's fine for the team. If somebody has to go to the dentist tomorrow, they should go to the dentist and don't have to hand in something, etc. Right? They should be free to spend an additional hour today at 10 or on Friday 2 more hours. We actually don't care. So I think what we do is if somebody joins us, the first thing is they get the trust that they have good intentions, what will give their best, etc. And I think we've never been disappointed with that approach, because people value the flexibility and the freedom that they have. Yeah. But of course, if you cannot, if you don't trust the people, remote is hell for you. It's
yeah, so it's got to be, like you say, all based on trust.
Yes, that's a lot.
Cool. So can we talk about the opportunities for asset owners? So new revenue streams perhaps coming now. I believe cross market, battery storage could potentially be an area. Could you give us a bit more information on that?
So maybe 2 cents on the history, because this topic is stressed so much in marketing that you think it's there since 200 years, and most of the people I think have never executed it in real life. I told you our first asset was a pump storage, right? And break even afterwards in 2021, and we really wanted to use the pump storage logic on a battery storage. So we actually signed the first customer for battery storage in Germany already, I think mid of 2021. But our first approach was not super sophisticated, and it was the mindset of either wholesales or ancillary services, and it was not a combination. It was we show you that we're better than whatever is there. So we actually ran the system in paper trading, etc., improved it, but it was never mind-blowing good to convince a customer, right? And we had that up and running and tried to sell it. And then suddenly, after our Series A in November 2021, the energy crisis emerged, and wholesales got totally crazy, and we outperform all ancillary services like by 80% plus, right? Yeah. And we're like, oh, maybe there is something to it, right? And invested some time and improved the thing and said, okay, we will show it at the first eWorld after COVID to prospective customers and see what they think of our technology. Because we were quite confident, right? We've just raised our Series A, we had the money, we could invest it upfront in the first version of the product, and we had like more than 100 meetings pre-booked, right? And I think 95 times of the 100 we had shown battery optimization, and people were like skeptical back then in 2022 and said, this is because of energy crisis, and post energy crisis it will be gone and nobody needs it and it's just blah blah blah. Yeah, we still got a lot of inbound requests, and 2023 we outperformed ancillary services by 60%, still with no energy crisis, right? And I think from a timing that was really good, and when we called it in the beginning cross market, because we wanted to explain that it's not revenue stacking, because in Germany you have to decide. It's an either or a split between, right? It's not that you can do things on top of others. That's different in other markets. And in the beginning, it was FCR, which is the easiest service, right? You put a frequency control on a battery and then everything is going magically. So you have to bid once a day for 4-hour blocks. So every 6-year-old can do that more or less, right? And they're entering the numbers. Yeah. And then we did wholesales on top, right? That was the first thing. I think that was smart, but it was not a technological innovation. It's using unutilized capacity better than before, right? And also managing the SOC management proactively instead of against imbalance. So that was a smart step, but it got really interesting when we added A4R, which has a capacity and an energy component, because suddenly you had three revenue streams that are correlated, influence each other in terms of what restrictions on a technical and commercial level they impose to the other revenue stream, right? So it makes a difference if you split the battery half-half or in 3/3 or however you do it. And suddenly the complexity exploded, right? And it's a huge optimization. We do like billions or millions, not yet billions, but over time, millions of simulations to train the models, to take the best decision they had and then execute in real time and readjust and take all the warranty terms into consideration. And this is what we call cross-market optimization. And to tell you why I want to stress that point, because a lot of people tell that this is super normal and everybody does it. Last year in Germany, we had like 60 megawatts, beginning of last year, we had like 60 megawatts of pre-qualified capacity in A4R of batteries, right? And we know basically all the batteries that are pre-qualified for A4R. So that market is really early, and I'm really looking forward to see who can really deliver on their sales pitch now, because we have the stuff live. We know what's the outcome. And I don't exaggerate here, it's the most complex stuff I've seen in my more than 20 years in the energy and software space, because you have a mix of auctions and you have very shallow markets in terms of market depth. When you look at FCR, how do other players behave? You have continuously traded markets. You have 96 quarter hourly auctions in A4R. So there is a lot of dynamic even going on after the initial decision they had to re-optimize and warranty terms and availabilities and thermal profiles and all that stuff. So that's really exciting. And this year, I'm pretty sure we'll show off who has the tech to deliver on it and who has just the concept in mind. And
so you guys are doing it, putting in the work in 2022, understanding
2023,
the complexities, bringing the solution to market. So, so were you ahead of the competition then in that space? Because you were
I think it was by luck, right? Because we had this pump storage, which is on a very conceptual level, the same thing, right? I would even argue most people think batteries are more complex. If you have a complex pumped hydro setup, I wouldn't mess with that, right? It's different technology, times between switching from pumping turbining. So batteries have different issues, right?
Yeah.
And we were just eager to apply it because we thought there will be something and that batteries play a role, right? Now it's obvious, but like 2.5 years ago, 3 years meanwhile, close to, it was a big bet in that sense. And I think we were just lucky with the timing that we had a solution when others just founded the company, right? Including our background. So I think it was not that we had the crystal ball and knew that battery will be a thing, but we were curious enough to build a solution for a problem that hasn't been there before the energy crisis, or not yet there.
Well, look, timing always plays a little bit of a part, but you've got to seize the opportunity in front of you as well, and you've got to put in the work. So that bet sounds like it's paying off, and excited to see the 24. Obviously, the numbers, like you say, at the end of the year, we'll really have a good idea. That leads me nicely onto Enspired. And what you think? What's your edge? Why are you, in this position that you are in now, where you've raised the capital? You're killing it in different areas. So what is your edge that you think Enspired have?
I think we made some really good strategic choices in the beginning. Like the one was to be really fully automated, right? So we never had traders sitting in front of screens and optimizing assets. I think in a decentralized world that's just not suitable anymore and not delivering the best revenue. The other component that was pretty clear for us, as we're all software guys, is to have control of the full value chain. So we don't outsource whatever, right? Whatever is necessary to connect an asset with the market, and everything in between is in our hands. And this really pays off now. And that will also be interesting how our colleagues do, because moving to another market is solely our decision, right? From market access, from data input from whatever. So we're in full control of how fast or not fast we scale it, or how much attention we put on certain countries, etc. So that really pays off. It may seem obvious in the first step to be faster in the first market, right? By taking a third-party vendor in, etc., instead of building it in-house. That was not an option because we did that before, right? So that's maybe an unfair starting point we had. So I think there is a lot of things that start to play out strategically of decisions or a geographical diversification, right? Now imagine we would have started with our wholesales background and say UK batteries is the big thing, and we would have started this wholesales battery optimizer, right? We would have a huge problem now. We would have had the first 3 years, then we would have an exciting year, and now we would have a big problem, right? So also the geographical diversification is key. So I think there were 2-3 things that we did. And the fourth component is we're really proud that we invested from the beginning. We had a separate team, or we still have a separate team for machine learning AI, R&D, publicly funded. I think we collected already more than 3 million euros additionally on public funds. And they're working on reinforcement learning agents, optimizing parameters with genetic algorithms, etc. So it's not like that we had a headline on the website and then we said powered by AI or with AI. That's part of our strategy, that we said our tech stack is really cool, right? At the moment, it's cutting edge. We have the fanciest stuff ever we wished for from a technical perspective, but still at some point in time you may reach whatever limit with it. And the question is, what's then the next big thing? How you improve the revenue by another 10% for our customers. And that's actually not a bet, it's an investment, because we firmly believe it pays off. So we have this team since the beginning, since 3.5 of the 4 years that we exist. It's just recently grown, or it grows to 9 people that do nothing else except working on the technology of the future to improve our business model. And I think those things nicely aligned also for this funding round, right? It's like, or we implemented real-time emission savings in the dashboard for our customers. So it's emission savings, automated, asset light, battery storage, renewables, AI stuff in different applications. So I think that's also why people want to work for us, because they have this feeling, I understand how my contribution adds impact in terms of bringing batteries online or making them a more attractive investment compared to conventional power plants. I can see the emission savings, I can count them, right? And that nicely aligns after 4 years.
Yeah, I was super interested to talk to you about that, because like you say, I was at eWorld and I walked past all the stands. Powered by AI was something I was seeing a lot.
Of course.
I was asking myself the question, but how are they actually implementing? What are they using it for was a question. And I think a lot of businesses know they have to use it because there's no getting away from it now. Like Pandora's box has been opened, but I think your business being fully automated from the beginning, like you say, you were working on AI before it became in mainstream news.
So that's for us, that's a very easy one, right? So traditionally, first of all, we distinguish, I always say machine learning AI, because we distinguish between the more established technologies, right? Neural networks and genetic algorithms and support vector machines stuff, right? That's centuries old thing. And when we talk about AI, it's mainly about reinforcement learning, deep reinforcement learning. So the really fancy stuff. Our idea was, as we're fully automated, how do we ingrain the experience, intuition that traders supposed to have, right? There is obviously, and we don't neglect it, something to learn from observing the market. Right? There is changes, nuclear is phased out, higher renewable penetration. There is changes happening and you have to learn it. So you cannot, in the past, in the old company, we hard coded stuff, right? Execution algorithms. And it was really hard to make them adaptive. And so we thought, like, how can we, or what technology can we use to make our model behave different on a volatile day, put more into wholesales, less into ancillary services, etc. Also during the day, change your behavior 4 hours before delivery compared to half an hour, but without hard coding it, right?
Yeah.
What is there forever is like price forecasting, demand forecasting, right? That's, you can buy that forecasts. So everybody can write with machine learning if they use a support vector machine to do a price prediction, right? Or predict whatever time series. That's not what we're into. We of course have that, right? Because we have to control forecast quality. We promise a service to our customers and we cannot be fully dependent on whatever external forecasts. And if they're crappy, our service is crappy, right? It doesn't work from a strategic perspective.
Yeah.
What's way more intriguing is how we apply it to execution, right? To give models a certain amount of parameters and restrictions and say you're more or less allowed to take easy examples, adjust your position size or the amount of orders or the execution strategy, and then run millions of simulations with that so that the model can learn and say, okay, if the forecast is more than 30% off for the ahead, there is a tendency to do that. And that's why I behave more aggressive and show bigger orders, or I'm top of order book, or I'm at a certain indicator, right? And to make sure that this behavior is not outdated, we also regularly retrain the models. So every model is then specifically trained for a customer asset. So we're not software vendors. We don't want to one solution fits all approach, but we have basically a platform. We have the backtesting and simulation capabilities that have been developed to train the machine learning and the AI models. Then we get a customer asset, we train that model to it, and then we regularly retrain it. And then there is a layer above that checks if the retrained model delivers better performance than the old one, right? Because we also don't want to start the retraining process all the time. So even that process is automated, and that adds a bunch of intelligence and a bunch of complexity. Because now imagine what I told you. Let's say we decided for the business model is the cool thing, and the technology is not the USP, right? We think it's business model innovation. And I buy a tool from vendor A for wholesales, and I buy a tool for ancillary services bidding from vendor B. And then I want to have a joint optimization for a customer-specific asset on a certain database and run a million simulations to train a machine learning model, right? How on earth would that work, right? Because the one optimization tool has the goal to optimize wholesale revenues. The other maybe the portfolio bidding for ancillary services. They use different data and different granularity. And how do I bring a machine learning layer on top to tell those two external tools to optimize towards one goal? And in worst case, you have a degradation model inside that needs to consider both outputs, right? You cannot.
Yeah.
And this is why I think 2024 is the year where you will see where technology starts to make a difference, because the complexity just is so high when you integrate all revenue streams that you will see a difference, and not just 5% in revenue, but double digit.
Awesome. So what I've heard from other companies is like the AI that they've seen being adopted is just for like back office efficiencies when we talk about trading. But what you're saying there is you've been working on reinforcement learning for the last few years, and you've got some models that you're working on, so are then going to allow algos to react and learn, improve as they go, rather than like you say, an algo that's been hard coded that can stick to a specific path but can't react to what's happening in front of it. Is that what you're saying? Is like I'm just trying to. I'm not a technical person. I'm trying to bring it down to like my level, and maybe someone who's also not.
Yeah, that's correct. We're just at an intermediary step. So the ultimate goal is to have something fully self-learning. We're not there yet, right? That's complex stuff. It's like AlphaGo with the moving boards, because the energy market doesn't have fixed rules in that sense.
Yeah.
So we're in an intermediary step where I would say there is a hard-coded piece, but there is a lot of knobs you can turn and tweak the behavior, and the models turn these knobs automatically, if that's an easy explanation. So to make them highly adaptive to market environments or short-term market movements.
Yeah. So that's something that you are, like, obviously it's not there yet completely, and it'll always improve, but you've been working on that for a while. This is not something like
that's what I said is an operation, right? So our models are automatically retrained. They behave different based on the fundamental situation. They calculate scenarios and say, okay, if some capacity left, should I put it into wholesales or A for our energy? What's the expected value? What volatility do I see? What's the indicators that I'm looking at? So that stuff is there, right? So, but to not overpromise in that sense, it's not fully self-learning AlphaGo reinforcement stuff, right? That's still on the roadmap. That's a beast.
Yeah, absolutely. So that's what I was going to ask. So where do you see, like, what's the future going to look like for how AI is going to be used in the energy optimization of asset space?
It depends how far you want to look, right? In an ideal machine learning AI setup, you would have a self-learning model that gets all the input data that you have from cross-border capacities, consumption patterns, generation pattern, actual data, etc., that learns by itself how to optimize an asset, right? For certain criteria. But I think that's rather 5 to 10 years out, to be honest. But in between, if you look like we have improved revenues for batteries, the same physical batteries by 60% with data and technology over the last 2 years. 60%, right? 60%. I mean, whatever business case has ever been improved by 60% just with technology. Simple like this. Not simple, but with the same physical investment that you have, right? So I think that's a mind-blowing metric or sign of what data and technology can do. And we have a fully fledged roadmap for 2 years, and we could draw one for 5, right? So there's quite some potential, I would say.
Yeah, pretty mind-blowing. Like you say, 60% in 2 years. Do you think that'll potential to snowball in the next few years as well?
So of course, it's as with every improvement, the next percentages always get harder, right? It doesn't scale linear, so I cannot promise another 60% for the next 2 years. But this is exactly where our AI research comes in, right? Because the question is, maybe we get the next 10, 20, and then, wow, it will be really cumbersome to get another 5 and another 3. And then the question is, okay, where do I get the next 10 or the next 20, right?
Yeah.
And this is what we're working on. So we don't need it this year or next year, but it's really long-term strategy that we started 3.5 years ago. And if it works out, it will be really hard for competitors if they start in 2 years, right? Because then they're 5 years late. So
no, awesome. No, that's super interesting. Wanted definitely to get some of your thoughts when we think about AI in the future there. I think from my side as well, just be good to just get an understanding. I hear behind the meter a lot, and I'll be honest, there might be some people who are listening as well. I don't really understand it. So like, what is it when I hear behind the meter? Like, what are we talking about here?
So basically everything we have talked so far is called either front of meter, grid scale, utility scale. There are different names for the same thing, which means you place an asset like a battery storage, and its sole purpose and only use case is stabilize the grid and make money. So you would bid it into ancillaries and wholesales and try to get the best out of it. When you talk about behind the meter, you're in I would say from an energy perspective or energy regulation perspective, in a totally different universe. Because then you're suddenly thrown back into Stone Age of regulation, because the metering point belongs to the supplier in most countries. UK is working on it with an update this November. France has a special regulation, which is pretty cool. But most other markets, you face two components. One is you have to align with the supplier if you're not the supplier. And the other component is that an asset behind the meter typically has several use cases. So let's take this grid scale battery storage, put it behind the meter, 1 megawatt thing, 100 kilowatt, it doesn't matter. Then it's typically used, as a backup to replace a diesel generator, right, for emission savings. And you have a part of the battery in terms of energy and capacity that you're not allowed to touch, right? It's sitting idle, replacing the diesel generator. You may have PV, ground or rooftop installation, and depending on the preference of your customer, they maybe want to maximize own consumption because that's very important for them. You maybe have batteries that do have off-grid capabilities, deal with power quality, whatever stuff, right? There's a lot of different peak shaving, of course, the classic, trying to save grid costs. So you pose several use cases on the battery storage that need to be managed in parallel, right? And of course, you could use a battery behind the meter battery and do the same what you do front of the meter, but that's typically not the case. So typically they have several use cases. And what we, for example, do as Enspired, we mainly take care of the residual flexibility, right? So if you have a battery, you reserve a portion for replacing the diesel generator. You have a certain load curve based on your excess PV on-site generation, then something is left and we deal with it, which means from a pure against the market commercialization, it has less revenue potential, but it's subsidized in that sense by other use cases that you have. That's a field where where a lot of players start to being active now, especially in the commercial industrial scale, but it's highly regulated, differs from country to country. There is a lot of residential in Germany, for example, residential batteries. There's not so much going on yet in other countries. So I think it's a midterm, very interesting use case. And we also optimize these kind of batteries already, but it's a tricky thing out of not technology, but regulation.
Right. Okay. Yeah. Interesting. Well, thanks for that. I think I understand behind the meter a little bit more than I do, because as you said, I'm hearing it more and more. I work with clients that are saying, oh yeah, we're looking at behind the meter solutions, and it seems to be one of the things a lot of firms and companies are looking at.
It's super smart, right? Because you solve that flexibility issue, especially when co-located with PV or on-site generation in general, at the source, right? Without stressing the grid. So instead of feeding it in and some grid scale asset somewhere takes it, which is physically not happening anyway, because the electrons don't care what we trade, you can solve it behind that meter already, right? And just take care of the netted position. So in that sense, it's a very important step towards decentralization and can take away some stress from the grids.
Which is a big problem that we're having.
Yes.
Awesome. Well, look, Jürgen, I know the CEO of a company that have just raised Series B. You're going to be very busy. You've got lots of plans. It's exciting times. So I won't take up any more of your time, Jürgen, but it's been great to talk, and congratulations again, and excited to see what the future holds in the next 6 to 12 months at Enspired.
Thanks a lot, Patrick. I enjoyed it. Happy to catch up in a year or so to see if we delivered on our plans.
Yeah, it'll be great to have you back on again. Thanks.
Thanks a lot.